And this year, especially with uncertainty, dividends may not make you rich in the short term, but let me tell you something. It's going to pay you out compoundingly. And number two, if the market falls, it just means you get more free shit. And then when the market eventually goes back up, because it always goes back up, you double up. But nobody wants to tell you that. But what would I do? I would buy the shit out of dividend stocks right now because I think dividend stocks are going to have a massive year. And if anything, this is why I love divvies. I know you guys, and I know I repeat this every day for the last 2 years, but think about a dividend stock. Why are divvy stocks so important? Because if they have a track record of always paying you or never cutting their divvy, here's the thing. If you buy a divvy stock at $50 and it gives you an 8% dividend, every quarter, every 3 months, it gives you 2%. And you have a dividend reinvestment, what is that? That's $1 per share that you get every quarter. And if you have a dividend reinvesting, you tell it, hey, instead of giving me the cash, just buy more shares with it, right? So it buys you $1 worth of shares for every share you own. So if you own 10 shares, you get 0.2 shares. Doesn't sound like a lot. If you have 100 shares, you get 2 shares, right? Whatever. And then guess what? The next quarter, it pays you 2%, but not of the original. If you have 100 shares, it pays you 2% of 102 shares. So now you get even more shares, right? So that's great. And it just keeps compounding and compounding. But here's the kicker. But Stocky, what if the market crashes? Good. Because now when it pays me the same per dollar amount, right? The dollar per share. If this is $30, guess what? I get more free shares because $1, or if you have 100 shares, $10, bought you 0.25 shares per divvy payout. Now it buys you 0.3. I get 50% more free shares. And if I have 1,000 shares, I get even more. And if the stock stays low, every dividend payout reinvests gets me more shares than if it was a higher price. And then when the market recovers in 2 to 5 years, I have more shares worth $50 each, and I'm fucking banking. This is a defensive play. And this is a very defensive time right now. It's like having a free money printer at home. Top 5 divvy stocks, that depends on you. But my top 5 ownership of amount of divvies. Now, number 1 is MO. A lot of people think it's a dying company. They can say what they want, but you know something? MO did this, I bought here, and it's been doing this since. And you know what? As long as people are in a recession or out of work, they smoke more. Vaping is huge. They did a hostile takeover of Juul 2 years ago. They moved into that market, and they're also investing in marijuana legalization or marijuana down the road. I love it. 8% divvy. I have made more fucking money from this one than any other divvy. My number 2 is ABBV. Healthcare sector is not going anywhere. ABBV dipped to $106 during the dip in December or November, and I bought the shit out of that dip. Just the shares alone are up 25% since then, and they pay a shitload out. Number 3 for me right now is Verizon. This, I think, is the biggest discount out there right now. Verizon, number 1 carrier in the United States. Number 2, partnered with Apple for 5G rollout. Number 3, building lots of infrastructure. Sure, they have to do a 6-month delay right now that they agreed, and they're probably going to get money from the U.S. government from it because of airports and stuff like that. But they are moving big time into 5G. And number 4, they bought Vodafone or TracFone, whatever it was, the number 1 disposable carrier. Boom, easy right there. I think Verizon, and I've been in Verizon for a while, they upped their divvy to 5%. I think it's massive. Number 4, I have O Realty. O Realty is one of the only dividend-paying stocks and one of the only REITs that have not gapped up from pre-COVID levels. Why? Because part of their portfolio is gyms and theaters. Once COVID is not over but becomes normalized, like the flu and other things, and people just kind of get used to it, and these reopen, that'll give them the last little bit. Why do I love them? Because they pay monthly. They compound that ass monthly. Sure, it's only 0.5%, but 0.5% monthly will pay you a lot more than 5% quarterly broken up because it just compounds quicker. And number 5, I have, what's my other biggest holding after that? I would say, I'd have to look, but I think Coke, I think it's Coke. Because Coke is not going to be a massive gainer over time, but it's not going anywhere. They spent 100 years and $1 trillion making sure that they were in every fucking corner of the earth. They're not going anywhere. So I'll just collect all those shares, and then down the road, I just like getting coupons and just spending them. I am soon to be adding Zim, because even though I get scared of anything that has a 23% dividend, the way shipping is going right now and the way that they're able to demand and with bottlenecks and supply chains, I don't think that they're in danger of dropping that too much significantly, at least for the next couple of years. Normally, if it's over 10%, I don't touch it because dividends for a lot of companies are just a way of bribing shareholders to continue to hold. I think another one that I don't personally have, but I know we focused on and we talked about in the morning call on Friday of last week, and the actual stock has been running, is XOM. XOM is a massive one. And remember we talked about energy and oil? XOM pays about a 6% divvy, and they just announced last Friday, and we talked about it in the morning, that they are expecting to crush their Q4 revenue report for the next earnings report. And since then, it has had a flock, and a lot of you guys have been playing it and making ungodly amounts of money on the equity itself. But as far as a dividend, I mean, there's plenty, guys. We literally have a channel in Discord that's just about dividends and research and questions about it. So there's people in there that have been doing dividend investing a lot longer than me and might have some better knowledge than I do on specific stocks and stuff like that. But there's nothing. That's why I always tell people, why put your money in a mutual fund, right? Why put your money in a mutual fund that A, doesn't give you a dividend, B, charges you a pretty decent size expense ratio. Like I always tell you guys about 401ks, right? You don't know anything about 401ks, you sign up through HR, next thing you know, you have a 1% management fee. That's all good and great until it's time to retire and you realize 20% of your money at minimum is gone from management fees and you got to pay taxes on it and now you can't retire. Fuck that. Why would I go into a mutual fund when I could buy VU or VTI, whichever crew you're on, don't fight, guys. I could self-direct it. It has a 0.03% management fee. Oh, and by the way, a 1% dividend paid out quarterly, which means 0.25% quarterly, which means, wait a second, my management fee is fucking covered by 2 months or 2 quarters of dividend payout. So I'm not paying shit to anybody, and I got the total market. Handpicked Vanguard S&P 500. Why the fuck would I put my money in mutual funds? How many of you guys are paying someone to manage your money and you're not even outpacing the S&P 500? Fuck that. Instead of trying to outsmart the computers and the hedge funds, I'll just let them fucking make money for me. Put it in the S&P. Hey, listen, you guys do your thing. You guys can fight back and forth all you want. And every time there's a big dip, I'll just add a little bit more. But fuck it. Enjoy. Why would I get in the ring and risk getting the shit knocked out of me when I can sit on the sidelines and eat popcorn and watch 2 people knock the shit out of them and go home being just fine? Now, I'm not trying to force you guys or telling you to get into dividends, but I think it's very important that I use this platform to a lot of you guys who are younger, who only hear from people saying, well, that's boomer shit. That's boomer shit. That's boomer shit. You ain't gonna get rich doing that. That's like watching paint dry. I'd rather watch paint dry on a house I own than pay rent to someone else the rest of my life with the idea that maybe that guy will die and I'll get a free house or something. I don't fucking know an analogy for that. And this year, especially with uncertainty, dividends may not make you rich in the short term, but let me tell you something. It's going to pay you out compoundingly, which is the greatest fucking tool in the world. And number 2, if the market falls, it just means you get more free shit. And then when the market eventually goes back up, because it always goes back up, you double up. But nobody wants to tell you that. Why? Because the only 2 people who are going to tell you this are A, people who don't want you to do that because they want you to try to chase the dream so they can fuck you and take your money. Or B, kids on TikTok who got really lucky during the greatest bull run in history and tell you they're a genius and that if you want to get rich too, but now they're broke and deactivate their account. Or number 3, someone trying to sell you something, ladies and gentlemen. The most successful scammers in history are people who take advantage of other people during economic downturns. So I don't know if I gave anybody something they didn't already know, because I know I talk about this shit all the time, but I think that I owe it with my platform to kind of give you guys something that you probably won't see normally on the internet from people that talk about the stock market, and the ones who do are usually doing it in a very dry manner. Oh shit, I forgot about Walgreens. Thank you. I didn't open it up. It's Walgreens, Coke, and then O is number 6 for me. O, and then XOM I don't own, but I should. Walgreens is one. After Walgreens raised their divvy to 5.5% last year, and then they announced the big Village Clinic C-Box that they're doing everywhere, I jumped into them, and they just beat this morning. Plus Boots Alliance, guys, they're potentially selling the Boots chain for Walgreens Boots Alliance, the boots chain for $8.1 billion. And if they do, that's a lot of capital they can use. Why do you think boomers have money? I told you guys earlier, you guys were all like, well, Stocky, I got to get rich now. I'm in a problem now. You're going to get older regardless. And let me tell you a little secret that everybody, and I'm probably the only one on the internet that's going to tell you this. Let me tell you a little secret. You know all those people you know that struck it rich? There's two types of people that show you these big wins. There's three types. Type 1 is your Photoshop people. I see that a lot in Discords. Very easy. Number 2, your, hey, look at me. But when you zoom out, that's what you see. And number 3, you have this guy post his screenshot. And guess what? Why does the house always win, guys? Because when you go to the casino and you hit it big, you don't just leave forever. No, you come back. You get that itch. I did it once. I can do it again. Oh, I lost some of it. Well, I'll just bet more next time and get it back. Shit, I'm down 50%. All right, I'll just go in with this 50%. As soon as I get back to even, I'm done. They give it all back. I'm trying to teach you guys to be the fourth. And that is either A, 90% in strong, long-term shit, and still get your fix with 10%. Have fun with it. Fuck it, have fun with it. Because if the market averages 10% up per year and your long-term goes up, you're covering that loss at the end of the year. You're breaking even, right? But if you do strike it and you do get big, I want you to take those gains. Let's say you take 10%, turn to 15%. I want you to take that 5%, account for taxes, slide that bitch right here, and start over again. If you lose 50% of this, you're still break even. Let's say you do well again. I want you to slide that bitch over here. Now if you lose 50%, you're still up 5%. I want you guys to get into that mindset of not trying to get rich quick. Because in the end, the house will win. There are people and institutions and money out there that is beyond your fucking conceivable understanding. There is computers at work. There are people that literally fuck with you for fun. There are people that can see shit you can't see. There are computers that know exactly where your sell order is, and they're gonna sell right before you, and then you're bag holding. They know where you're gonna buy, and they'll buy before you. They pay for that information. You think your brokerage, who doesn't charge you a commission, is doing it because they're just nice guys? No, these are for-profit companies. They're making money. They're making money from the companies that are buying the information of where you're buying and selling so they can get there before you.